Where do you see the growth markets? Obviously the US, largest market, still growing at the strongest, strangely, for a mature market. People talk about China and India, but maybe beyond that, what's your view of further emerging markets that perhaps in 10 years' time could be important?
I think it's interesting that people tend to overlook the US, despite the fact that it's the largest consumer. And I think because it's almost as though it's a familiarity. There's a familiarity with the US market that people tend to overlook it and say, well, we want more exciting growth stories, etc. But the US has been the fundamental backdrop or the fundamental growth bedrock for growth in the diamond industry for many, many years. We've looked at China, and the growth there is settling in. We're still seeing an extraordinary build out of retailers, but they're being more inventory conscious. So overall, absolute demand is undoubtedly going to grow in China. We look at India. India's got such an untapped market, and economists, etc., economists and investors still look at India as one of the main markets to invest in the next 5 to 10 years. But also, you can look at the recovery in some of the more commodity-based economies over the next 10 years, because this commodity malaise is not going to continue. If we're looking 5, 10 years from now, you would look back again at Russia, you'd look back at the UAE. The petrodollar isn't going to disappear. It looks incredibly stressed right now, and yes, there are going to be buyers moving out to the market, but who's to say that oil isn't going to be back at $50, $75, I don't know, in 5, 10 years' time? That petrodollar is again going to be looking for homes. And also, we can't ignore Europe. Europe has been out of the equation for so long. People have just sort of ignored Europe. But it's a huge market. There's a huge density of wealth in Europe that actually has probably been overlooked, so much so that there's probably a huge opportunity there if it can obviously overcome a lot of the short-term issues.
And do you see that mainly being driven, there's been a lot of talk about Chinese tourists purchasing in Europe, taking goods home. Do you see it being driven by that, or just something fundamental about the European market that makes it relatively solid, albeit at a low base?
I think fundamentally the European market Europe as a whole is still one of the wealthiest continents on the earth, but it's had to undergo so much structural change. But yeah, I wouldn't even look at it as people going into Europe acquiring goods using the euro, the weakness of the euro as an opportunity. I think fundamentally, you look at France, you look at Germany, you look at the UK, they're still economies that have the ability to grow and consume huge amounts of goods at a higher price level than most would anticipate.
And then China news coming out at the start of the year, issues with the stock market, people speculating that the building boom has now ended, and the implications of that having on other miners. For diamonds, I guess it's slightly different. How do you see things?
Well, this is something that we've been communicating with our clients and having many debates over, is that when you talk commodities, you tend to talk about the primary assets that go into the building of properties. You're talking about the insulation, you're talking about electricity generation. They're all primary asset classes. Very few people talk about China and the later cycle. You're talking about the burgeoning wealth of middle classes, the propensity to purchase goods. And no one can tell me that the middle classes in China at this time have declined. They may be more price aware because of the familiarity of goods, but that's not a bad thing, because as the economy matures, its acceptance of new goods settles down and it becomes more acceptable, more just a way of life to buy diamond rings for engagement. And there's a huge opportunity there, but I don't think it has to be tied back into sort of a stimulus argument. It just can go through to this maturation of an economy to a more consumer-driven one, and that offers a huge opportunity.
Yeah, and there are different buying patterns around the world, as we know. I wonder what your views are on whether, the building boom diamond jewellery is going to move more towards the fashion end of the market rather more than the occasion buying or engagement or things like that?
Well, this was something that was sort of we looked at Signet's recent results. One of the points they highlighted where a considerable amount of growth was in their Two of Us product, and it was actually a ring but with 2 stones, and that's incredibly interesting from the fact that if growth can come from almost no change, the only change being an additional stone in a simple ring, and it's accepted and actually has driven demand, that can be very positive from a volume-based argument. And it also shows that diamonds are still desired. There's still this allure of diamonds that actually still comes back to the fundamental reason why you're buying them, the whole emotional purchase. And really, 1 stone, 2 stone, arguably isn't that much difference. But 2 stones obviously indicates there's a demand trend there that offers a huge opportunity, at least to capitalise off from a retail basis.
And I guess that you touched on an interesting point, whether there's going to be desire there. I think there's a lot of talk in the market generally about millennials and what their view of diamonds is going to be. Are they going to still associate diamonds with love and eternity and commitment in the same way as previous generations did? And I wonder the extent to which you think that's a threat or an opportunity.
Both. We're really not quite sure how millennials are going to view diamonds because they haven't been exposed to the same levels of advertising. And it comes back to this driving demand argument. If millennials as a generation don't view diamonds as an emotional purchase and that attraction, it's largely because they're kind of not really aware of why. And it does go back to that advertising. It goes back to the reasoning behind it, the creation of an emotional purchase. And the only way that you are going to instill that into people's mindsets is by telling them the message. And it does come down to that battleground for the luxury dollar.
You look specifically at retail and what happened over Christmas, and quite positive. You say here that it looks like Santa did deliver. What was your reasoning behind that?
Well, we've taken a look at some of the early stats that have come out from the retailers, and also taken into account the sort of the trends that we've seen and the commentary coming out from the marketplace, talking to management teams at the retail end. And the view has been that I think there was an anticipation of not a particularly good year. Last year was one that there was an expectation of considerable growth. It didn't happen. And that was one of the precursors for the issues in the industry for the later part of the year. This year, the expectations were lower. And when you've got lower expectations, it's a lot easier to exceed. And I think we've seen so far that some of the more conservative estimates have been comfortably beaten. And that's something to build upon.